It's been a tough year or more for Alibaba. Its stock price has declined about 60% since hitting all-time highs in October of 2020. Heading into 2022, management hopes to turn the tide. Alibaba recently held an analyst day where the company laid out its plans to revive growth. But was there really anything game-changing in the new presentation? Alibaba's core strategy is to improve its e-commerce marketplaces that have dominated wealthier Chinese cities. Alibaba hopes to increase the number of VIP customers that pay a subscription, somewhat similar to Amazon Prime. Also, Alibaba is targeting older customers to upgrade services linked to big-ticket items. Management further aims to use artificial intelligence and automation to make its digital ads more efficient, since digital ads are Alibaba's core profit center. Alibaba is also investing heavily in new growth areas. These include investments in lower-tier markets that gravitate toward group buying marketplaces. However, competition in this area is fierce, and it remains to be seen if Alibaba can become a lead player. Management also sees growth in other platforms, but cloud computing remains Alibaba's biggest opportunity outside its other core marketplaces. Here, Alibaba has market leadership, profitability, and the growth prospects are good. Overall, however, there wasn't anything particularly new in the Investor Day presentation, so it doesn't seem to have changed anyone's mind as shown by the recent stock activity. Although the stock is cheap at roughly 14 times this year's earnings estimates and 12.5 times next year's earnings estimates, Alibaba will likely have to prove out some of the new businesses before the stock can take off again. So now, let's take a look at the charts. We're taking a look at the weekly chart on Alibaba Group Holdings, and the symbol is BABA. For disclosure purposes, I do hold shares of Alibaba at this time, and what I was looking at was this trend line beginning here in about 2015 all the way through and on up. Now, this is where I was buying, is above that $200 a share. Subsequent to that is when the Chinese Communist Party decided to get involved in Alibaba's business, and there went the price all the way down here, and we're currently at $122.98. Lots of volatility and lots of downward trend. So this is a very, very dicey stock at this point to get into. Here in volume, the increase you can see at that level there, which you would expect on a downtrend, and into the MAC. What I was looking at was this point here. It looked like it was bottoming and basing after this failure and reflection at that point there. I figured this level here was decent to get involved, simply because the previous downtrend there in 2018 was at about that level, but it also looked like the fast line was going to head through that slow line, but it didn't. Got reflected, came on down, and here we are at this level here, negative 20, well below that zero line. But we've had a bounce here, and I think we'll have another bounce here, so perhaps we'll ultimately have the bottoming and basing here in the next few months or so. Into the histogram, you can see that this level here, things are improving. I was looking at something like that, but we are here. That's the reality of it. So we still have some room to go, so it's not quite time, but you can start looking at it. However, as I'll say later on, study the fundamentals, because there is the possibility of a delisting of this stock. Into the price rate of change, very long-term bottoming and basing, of course maximum negativity right here, and improvement through there. Same thing pretty much in the relative strength index, as well as the stochastics and the Williams, pretty much showing the same thing. here into the stochastics. Let's take a closer look at that. Nice bottoming and basing, but with that maximum negativity here, some improvement up to that level there. So things are improving. Now, the fundamentals you need to check on, because there's been some erosion in the numbers by the Chinese government getting involved in the business and restricting these tech stocks. So they will have a headwind. Also, you need to be aware, once again, that there is a possibility of a delisting sometime in the future. So pay attention to that. There's a lot going on here. There is a lot of potential improvement, but there's a lot of risk, a lot of risk. So study the fundamentals. And for today, that's ChewDog Charts. Thank you.